Hey everyone, today I'm here to talk about JD. JD just reported earnings 2 weeks ago and they just report that their growing is slowing, which investors didn't like. But one good news was they started a dividend, so it will be around 1% or even lower. I mean, it's just to start and they can increase it in the future. It's their plan, but they continue to go free cash flow positive and they continue to grow even in a bad year. So that's not all bad news. So let's talk about JD now. So JD is a consumer cyclical in China. Um, they it's a business with their market cap is around $60 billion. They are trading at a PE of 41, but their their earnings are not optimized, so their forward PE is expecting to be around 10, which is really low, really good. So their revenue growth, they have been growing around 23% per year for the last 5 years, which is really high. That's really good, even in a bad year like 2022 and 2021. 2021 was not a bad year for the Chinese market, but 2022 was really bad. It's expecting China is expecting to reopen now. They have been reopening slowly, but I'm expecting their second half will be huge. So it's they don't have high margins. Their growth margins is around 40% and net margin of 1%. Bear in mind that the last year was a fluke year. Their margins are higher, but not high margins. It's not high margin business, so it's a negative point for them. They have low debt. They have almost 22 billion in cash, and their long-term debt is only $4 billion. So they have net debt of around $27 billion, which is really good. They have a lot of money in cash. They do sometimes special dividends, and they are starting a dividend now. So they are returning capital to the shareholders. They are buying back shares, which is really good. So their return on invested capital is low. It's not, which is bad. Return on invested capital is something we really want to see in the company we own. It's a really important metric. So that's a really bad negative point for this company. Their moat, it's not a wide moat. They have a narrow moat. Chinese really love the business and they continue to buy them. So they are still growing. So they have some kind of moat. So in the last years, even in a bad year, they have been free cash flow positive, which is positive. They are returning capital to the shareholders. They are doing buybacks and they are doing special dividends. And now they just announced they will start to pay a dividend annual. I'm not sure, but I think it will be paid annually. So is this a good company to buy? So let's do our valuation and do our assumptions. The for my base case, I will assume that they will continue to grow. I will try to be conservative. I'm expecting China to really grow in the next years. Their middle class, it will be the fastest growing middle class after India maybe. So for the next 5 years, I'm expecting 40% and 80% for the last 5 years. Bear in mind, I believe this is really conservative. So if I want to invest in China, I need to be really conservative. I will assume a PE of 14, a discount rate of 12.5%, and their margins I'm expecting to be around 3.5% for my base case. It might be high, but I'm expecting them to optimize their margins. Maybe I'm being too optimist. I don't know. Um, Write in the comments what you think, but this is my assumption, and I might be too optimist. I might be more conservative. I don't know. For my bull case, I will expect 16% for the next 5 years and 10% growth for the last 5 years, P of 16. 4% margins, and for my bear case, I'm expecting them to grow around 12% for the next 5 years and 6% for the next five. So and 3% margins for my bear case. So bear in mind, I'm assuming a low PE, not a high PE or a median. It's above the median, even though they are growing really fast. I believe I'm being really conservative on the growth rate, but I'm being a little bit optimistic on them to manage and optimize their margins, so it will be fair. So, analyzing my cases and adding the cash per share, my final value for JD will be around $60. I believe their intrinsic value will be around 65 or $70, but I think I'm being a little conservative. So JD is trading now at $38, well above my intrinsic value. I think it's a good opportunity. Full disclosure, I just add a little bit to my position. I do own JD, but don't do what I say. Just do your due diligence. If you believe that's a good opportunity, it's your choice. I really like the company. I just don't like their margins. I think that it's a low margin business, and their return on invested capital is not too high, but I believe their return on invested capital will grow in the next years as China grows and their business grows as well. They are investing a lot in logistics and they have been growing a lot as well. So I really believe this company will be selling a lot in China and around the world. I believe they will continue to grow a lot, and for the next 5-10 years even more. So it's a good, their valuations they are trading under my intrinsic value and my value for the company. So I do own some shares. I believe in this company. It's I believe one of the best opportunities out there if you believe in China, and which is really difficult sometimes, but that's just my opinion. So I hope you find the video useful, and if you like the video, please subscribe. Bye.